everybody? It's Fisher Trader here, James Match again. We're going to talk, got me a TV in here now. We're going to talk more about selling covered calls, okay? So I just want to, let me check real quick. Yep, good. All right, so just want to talk about it again. We're going to use AMD as an example. I got my basic chart up here. Hope you guys like the Tony Stark frames. These are actually the blue light glasses. I actually got these HD Vision Night Ops Aviators also. They actually work really well in the sun. I got the blue ones too. I got them for like $8 each at Walmart, so no big deal. They're actually really good. I like them. I was surprised that the blue light ones actually work. I have a really expensive pair of the real thin line blue frames, but with a yellow lens, and they actually do really help with the blue light, but the frames are tiny, so it really irritates me. So back to it. So this is Fidelity Active Trader Pro. Got the laptop out here. So the highlighted line here, you're looking at the 200 EMA. A lot of guys ask me all the time what moving averages or what indicators and all this thing do you use. So I have the Bollinger Bands. I always change the setting. Currently it's on 2. Matter of fact, let me update that real quick. So this is on the standard second deviation, right? And you see how it's always pushing and riding these lines? Now watch this when I change it over to the third deviation, all right? And I'm actually gonna change the day average to, let me show you what it does with just the third deviation first. All right, you see how it's spaced out? The more you got it actually bouncing more toward the center band now. This is actually not the band. It only shows right here, it only shows the 2 bands. It doesn't have 3 on here. I just have it set to upper and lower. Give me just a second. Let's see. Let's set it to the 30-day average. I want the closing price. I can make it as obvious as I want or as not obvious. So for this, why would I want this? I'm looking for candles that poked out, right? So I don't really see any here. I don't know what's behind my little screen. Yeah, so nothing here. But we did see this here on this outer third deviation of the Bollinger Band. And what I would do with that is pretty much consider that it's pushed on the third band. It's not going any higher. So this next candle very well could be bearish. And if you can see, let me go ahead and modify that back. And I can change the color on that too. I'm not a professional per se with the modifying and all this good stuff, but you know, we can change the colors and do all this stuff too. I'll just leave it white. I really enjoyed the third deviation for the Bollinger Band. I got the 30-day average moving on here. This is a very simple basic chart. I mean, we can obviously go to more EMAs and all this other stuff. But I have a simple moving average 30. That's the orange one here. I highlight that guy for you. That's this one here. All right. And then I have the 13 exponential moving average EMA here on the top side. And I really gauged to find out whether or not this is going to cross or not. And as you see, when it crossed, it dove way down. So this cross probably actually took place when this second candle was taken over. And then you had that huge bullish engulfing candle here. And then you have the doji when it pushed up. But the moving averages, I mean, anybody can set these up themselves. You know, it doesn't really have to be any specific. It's like this is stress. Let me put this back in. This is a 3-minute chart. Again, like TOS, you know, or Thinkorswim or whatever. You can modify your time frames, right? So I have 3 minutes on here. I can do 1 minute. I can do 5 minutes. I can do 4 minutes. I can do 90 minutes. I can do any of those frames that I want. I'm going to put it to a daily chart, and we're going to put it at 6 months. It's going to show me AMD again. Basically the same thing we were looking at. I just have more EMAs here across the board. This is when I first started learning technical analysis from Kevin Trade's TCX Trader Circle. this is what we kind of both, you know, he was teaching me about the EMAs and support and resistance and all this. And what I came to realize, you know, once he moved on and started to reevaluate the way he was trading, I started also reevaluating the way I was trading. So he is extremely successful. If you're following him on IG or if you're in the group, you know that Kevin is actually really on point with his call outs. Now, whether or not when you follow them, you are on point, that's a whole nother story. You have to actually put yourself in a position to trade properly. You have to work on your dedication to time with it. You have to actually study what you're doing. You don't need to just take 20 trades out of nowhere and not really know why you got in them, etc. But the cool thing is about EMAs is you can put a broad spectrum on here. So we got a 250, a 9, 21, a 9 slow moving average. I got the Bollinger Bands on here, and I have a volume weighted moving average. So here at the bottom you see the 200, and you can see that that's probably the most calm line of all of them because it's the longest term. And when this tested this 200 EMA on this 6-month daily chart, you could almost bet your sweet bippy that AMD was going to push back up, because the 200 moving average support, that's a long moving average. So when it gets down to that level, people know that this is a huge baseline price. Let me go ahead and buy shares now. And guess what? That's what they did. They bought them over here, an average of $38 to $41. And then AMD went all the way up here where we are now at this 56 to 59 range. It closed at 55 today. So let's go ahead and change this up a little bit as well. Let's go ahead and get rid of the Bollinger Bands. Let's look at just the slow moving average and the exponential moving average along with the 200 moving average. All right, so here we have, so this is the calculated support and resistance, the green and blue here. I'm really not fond of these, to be honest with you. This is counting back pretty far, but as far as the actual, does it work or not, that's a whole different category. So let's go ahead and take that off. But you can put stops in here. This platform is actually really nice. You can put stops in here, and triggers and all that good stuff too. And you can really just do what you want. Patterns and events. Of course, I can go in here. I can actually lock in different double moving average crossovers, Bollinger Band movements from the bands. You can actually do a lot with these platforms that people don't really think about. And people who are starting out trading, of course, they're not going to be looking at this stuff. But once you really have a grasp on how to trade in general, whether it's just stocks or just options and stocks, you're going to really start to dig into this kind of stuff. So we'll go over that another time. For right now, we're going to leave that alone. So look at your EMAs, right? So the exponential moving average on the 9-day, and then you have the slow moving average on the simple moving average. Also, they are damn near, excuse my language, darn near on point with each other, okay? The exponential reacts a little faster. It's still a lagging indicator, but it's a faster reacting lagging indicator versus the slow moving average. The simple moving average is actually kind of behind it, right? So let's go ahead and just look at, we can pretty much guarantee when these crossed, when you have a slow moving average crossing over a larger moving average, that is a determination that you have an almost guaranteed move down, right? But if I had the 50 back on here, you'll be able to see that these 9s are crossing down over the 50 because the 50 was somewhere up in this range. Here's the 200. When it swooped down and it started to curve, we can pretty much know that AMD is not going to falter that far down, and it's right in here. I remember 3 years ago when AMD was like $12 a share. I had 500 something shares chilling. I should have kept them. $25,000 later, a few years, Anyway, so we had this high peak over here at 58, and we had this other high peak at 59, some change. But this is a volume weighted moving average, the one here in the center. It's the dashed dark purple line. Matter of fact, let me make this easier for you all to see. We'll make it that bright blue. All right, this one right here. This is your volume weighted moving average, right? So you can actually see that when it starts to test this and it breaks, you had a bearish motion, right? And the EMAs actually cross with it. So you can use a slow or an exponential moving average on the small side on 9, 10, 15 day, 5 day, 3 day, depending on, are you trading intraday, are you trading weekly or monthly, or are you trading long? If you're trading long, you need to be looking at the 200 maybe the 50 EMA or SMAs. The volume weighted moving average doesn't really work well on, like, say, Webull. I noticed that the volume weighted moving average doesn't really carry on really short term or really long term charts when I'm really trying to break into what I want to see. But we'll go ahead and close this. Don't need this guy. So now you have the basics. You have the 9 and the exponential moving average, simple and exponential. So as you can see, A and B is coming on down here, right? Once both of these start to curve, they're pushing, basically resisting the 200 moving average. Okay, and this doesn't happen all the time. However, if we saw these two cross down and we had a candle close under here on the daily, we could almost assume, again, projection, that you can assume that the price, if it does not support in the next day or so, you're going to catch a nice bearish motion down. Now, how far is it going to go below that? That's why I use the Bollinger Bands. Let me throw the Bollinger Bands back up here real quick, and I will show you. All right, you see how it went beyond, but it tested the third band, or second band rather. It reset back to what it was. So let me push to the third band again. We'll modify, and we'll go white so we can see a little better. And put it on the 30-day moving average. So you can clearly see it didn't ever test the actual third band here. It sort of tried here and it bounced back up. So you can actually pretend there's a center band moving through here. It does not show this on this. Webull, it does. So if you ever follow me on Instagram, or if you're in TCX and you see me posting charts up with Bollinger Bands showing upper, lower, and middle band, you'll actually see the middle band. I'm sure there's a setting on here I can get it pulled up. But we can pretty much look at the averages, and you can average the center prices together, and you can see where it should be. So the center band will more likely be around 46 or 48. But I use this as determination because, as we saw, it pushed against the third band and it wanted to come down. But there was so much bullish momentum right in that 9 EMA up. This is a 6-month daily chart, so each candle represents 1 day. The moment it broke below, we're okay. It's still riding. And we pushed on up and we tested that third band again. This time, it got pushed back down, all right? And this is February 2020, February 20th, 2020. This is when the coronavirus news first started really hitting the U.S. Drove down and drove all the way down here to like $36, $37. That low there on March 18 was $36.75. That was a perfect time to buy into AMD stock because now you're almost 70% higher than what you were. You damn near doubled your money just getting in at that low. And these next few days didn't move much. They stayed in the 40 range. But boom, right there you gapped up. You hit 46, and then within a few weeks later, about a month, almost a month later, you hit all the way back up to 58 again. All right. So that's kind of your basics on indicators. So now what we're going to talk about, let me check my time. Looks good. All right, so now what we're going to talk about is what I talked about in another video. It's going to be kind of a blend. Selling covered calls, right? So I got a lot of questions about the other videos that I did on selling calls and covered calls. So why not just sell the naked calls? Well, that puts you at basically infinite risk. And with that being said, if you sell a call at $10 a share and the current price is $5, but you don't have any shares to forfeit, you're going to have to pay at $10 a share. Oh, but what about the IV being high and it'll collapse and the stock will never make it that high? You'd be really surprised at what a stock can do really randomly out of nowhere. And that can really, really bend your account over, okay? So a few examples I have, again, we got AMD. I love AMD. This is Fidelity Active Trader Pro. Again, if you didn't hear me in the beginning, real quick, forgot the disclaimer in the beginning. I'll put it in print on the edit of the video. This is not trading advice. Do not trade based on what you see, what I'm explaining. only trade what you're comfortable with losing, because if you lose it, that's on you, not on me. I didn't tell you to do any of this. I am simply educating you into the form of tool belt of the options world that you can use. So tons of questions on this. The other videos are pretty explanatory, but what I will say is these are live examples of what I have currently in my Robinhood Play account. I use Fidelity as kind of my primary, and it's got my retirement or whatever and all that stuff going on. And I really only trade shares on that for the most part. I trade some long-term options on the Fidelity brokerage, but what we'll see here is AMD. That's the example we're going to use when I explain it in a minute. INNT, that was one I did. It was cheap, like 47 cents a share. Get 100 shares, turn and click the premium was like, it was pretty good. It was like $15 or $20. I think it was $15 or $20 per, no 20, it was $20 per contract that I got credit for times X amount of 1,800 shares, I believe it was. So what I did was I realized that IntelliStat is a much better opportunity as far as receiving the credit goes. So now if the shares continue to go down and down and down and down, they're sitting around $1 right now. They bumped back up to about 115, 120, which is excellent. We do not want the shares to go under $1 because then they hit the 12-month notice for the New York Stock Exchange. They have 12 months to get back over organically, and or they risk a reverse split. I don't want to be involved in reverse splits. All the ones I've ever had have always lost money. Do not get that twisted. Some old stocks did a forward split to where they actually gave you basically more equity, and like Apple and things like that did it, and I believe Alibaba maybe, but that's irrelevant. So I capitalized and walked up to 3,700 shares in IntelliStat, 500 shares MFA, just leaving that alone, I'm good with that one, 1,200 shares on OPK. And if any of you are watching OPK, you'll notice that it's actually over $2. And why does that matter? Because I sold $2 strike calls on all three of these. Okay, so let me break this down for you. 3,700, all right, times 2, you're looking at $7,400. 500 times 2, $1,000 bucks. 1,200 times 2, that's $2,400. But wait, you said you received a credit. Yes, I did. I received a credit. I received like $2,650 off of this credit back that I bought more shares with, which is why I went from 500 shares to 3,700 shares. So my absolute goal for this is for these contracts to be exercised at $2 because I'm instantly going to double my money. I will get a roughly 40% return on MFA. I will get a roughly 50% return on OPK, but IntelliStat is going to be a home run, and it's going to be right about 85% return, which is just tremendous. So what I'm doing by receiving these credits and then buying the shares back, I'm actually receiving the credit and I'm buying more and more shares at that lower price, because when the premium drops, I can actually get more shares because the premium's dropping. That means the share price is dropping also. That means it's getting further away from the $2 call because somebody's buying the $2 call that I'm selling. Okay, that's how that works. You got one buyer, one seller, whether it's a computer, whether it's a person, it doesn't matter. Always remember, one contract represents 100 shares of stock all the time. So if you have 500 shares, guess how many contracts I have? 5. Okay, 1,200. I have 12 contracts. 3,700. I have 37 contracts. I sold all of those calls. These expirations are for January 2022. These expirations here are for, what were they for? January 2021, and then MFA is for October of this year, 2020. So in the event that MFA, which was like $7, let's go back, let's just look, before the coronavirus kicked us in the butt over here. All right, that's ugly. Let's go to the 3 months, and we're gonna look at the daily chart. So as you can see up here, you're looking at $7, $7.50, okay? And then we walked on down. This was March 24th here. That was March 2018 to 25 was about the bottom of the market that we saw. That's where SPY hit 218. Like, it was just ugly. So we come on down. So now we got this drop. Okay, so now it went all the way to 32 cents, okay? On that day, MFA shares dropped from almost $3 all the way to 32 cents. I really, really feel bad for you if you're holding these long term. I really hope you bought like 3 times what you had at 32 cents a share, because you just compounded your shares and you already returned your money a lot, really, because you got back over $2.50 here on just about a month later on April 9th. Not even a month, like 3 weeks. And you got back up to 243. Okay, so when I saw it come down, I started picking these shares up around 180. Okay, so now I have compounded, because today it was down to like $1 and some change. Let's see. Look at the 5-day chart. That's going to put us here. Let's do it 30 minutes. There we go. All right, so we got 5 days here. Okay. From a 200 moving average, just gliding right on that line. So we're actually breaking down below it again. So that kind of worries me, only because if it does drop again back to some ridiculous price of 30 something cents, so that means the 12-month NYSC already got triggered, so they have to be back over $1 organically, which they did. They already made it back over that, okay? So in the event that these shares drop back to like 30 or 65 cents, I'm probably gonna buy a few hundred of them to compensate this other 500 shares I have. So if I have 500 now, I'll probably buy 1,000 just to really lower my cost to average so low, but I'm still selling those calls at the same time. So I will turn around and sell that many more contracts. If I buy 1,000, I'll sell 10 more contracts, hopefully gaining a moderate premium, whether it's 10, 20, 30 bucks. Right now, I think it's like 50 or 60. So I'm receiving, so for example, Intellistat is the easiest example, because for $107, the credit I was getting was $60 to $65, okay? A few of them I had to do 55, that was the only one I can get filled on, but I'm sitting here paying, I'm basically getting an instant 50% return. What can you do with the premium you receive? You can instantly use it to A, buy more shares like I did, B, open a whole new position on something else, C, hold the cash and wait. And why would you want to do that? Well, what you can do is, instead of waiting until 2022, since I got this premium for between $60 and $90 from the first shares that I bought, was like $90 something profit credit back to my account. I would take, say my average I think is like 65-ish right now credit, and you always keep the credit. You never pay the credit back. The credit is yours. Once you sold those calls, your shares are being held hostage, guaranteeing that buyer of the contract the right to get your shares at what I sold for at $2, okay? If the shares go to 5, oh well, you sold them at 2, but you don't care because you bought at less than 2. So anything above what you paid is profit, up to $2, okay? And you still kept the credit. So why do I not care? Well, first of all, I already received $2,500 or $2,600 profit in credit premium instantly on these Intellistat shares. Now what happens if the shares go down? Well, then you start to lose money. So then you need to think about it. Okay, so what do I need to do? Do I need to stay in this position? Do I need to break even and equalize? Okay, how do I do that? Well, that's where we get to INT. INT, but what you need to remember, let me check my time. Looks good, 23 minutes. What you have to check is, do the contracts you're buying, and this is on like even Shopify and things like that too, the SEC, Securities and Exchange Trade Commission, whatever, has a 0.05 cent increment rule for certain contracts under $3. Now, 5 cents and options is $5. Okay, so these have to trade in multiples of 5. So you can't, even though these Intellistats, I was $321 profit, this was today, okay, but I could not get out of these contracts for 5. I couldn't get out of them at 10. I could have probably just put a limit order and let it ride, but I really wanted to get into Intellistat to put me at a better place, okay, a better ratio as a whole. And I still ended up walking away with a $60 profit, which you saw how big of a difference, $321 profit to a $60 profit. I didn't lose anything, but I still, the shares were actually, they didn't lose anything either. They were basically at the same place I bought them at. So I got rid of that. That was about $840 back in my pocket. I put it all into these Intellistat shares. So I bought up front, I bought 600 shares. I think it was like $1.08, okay, per share. Added all those shares, got all that credit from it, and then I turned around and bought more shares. So I went all the way up to 3,700 shares, and now I have like a couple $100 in there chilling that I'm using for debit spreads and stuff like that. XLF, I got a nice debit spread on that right now. That'll be in the money tomorrow, and totally beautiful, beautiful contract exercise today. I'll probably sell it tomorrow morning because it's definitely going to be in the money. Anyway, let's chase the squirrels over here. So real quick notes. One contract represents 100 shares. We're selling covered calls. But wait, isn't a debit spread the same thing? In theory, sort of, because you're buying a call, which technically gives you the right to buy the shares at this price, etc. Or and then you sell the call against it, which makes it a debit spread. So I bought a call and I sold a call against it. So basically I capitalized and I equalized the shares, but instead of having shares, I equalized the price. So I bought a price for a premium, but then I sold another contract against that contract, which then lowered my cost on the debit spread, which in turn caps my profit, but also caps my risk. My risk is exactly what I spent on the debit spread. That's what a lot of people aren't understanding. So they'll go buying a debit spread for tomorrow. The stock price is like freaking $10 away from that. That's stupid. Please don't do that. So let's get into it real quick. We'll use AMD as an example, and we'll get into this. But real quick, the one thing I was saying about buying the contracts back. Okay, I might not have said it yet, but that is how you get out of a position earlier. Okay, if you're selling a contract, you are selling to open a position. Okay, a lot of you don't realize this. A lot of you new traders, that's cool. I didn't know this stuff 3 years ago. Buying to open, you're buying the contract. So say you're buying a call for $20 on Bank of America for next week. Okay, well, it's already in the money. Bank of America called $20, you bought it, you paid the premium up front, and then now you're hoping it's worth more on your expiration or whenever you decide to sell it. If you're selling a call, that means you're receiving a premium, somebody else paid you, okay? And now, in order to get out of that, unless the contract is exercised, you have to buy back the contract. Well, why would you want to buy back the contract? Well, let me show you. Best part about it is you keep your shares if you buy back the contract. If the contract price never hits and you're not exercised at expiration or before, you still keep the premium, and or you still keep the shares, or both. So, just for a fine example, let's say we paid $50, okay? I'm sorry, say we received $50 credit, okay? So the stock price is going down, right? So that means this premium is also going down. So let's say now the premium is only worth $15, okay? You know what? Let's make it a little easier. Let's say 10. So you received initially a $50 credit for selling one call against AMD, right? Well, AMD's price is faltering a little bit. It's not going to hit the strike that you're looking for, so you're not going to make any money on those shares, but you're going to keep the credit. Well, what if you don't want to wait until the end just to claim this extra 10 or extra $20, right? So now the premium is only worth $10. Well, if you're still holding that cash, you just made a $40 profit. Because, well, how do we do that? Well, you're going to buy this contract back at $10, okay? You're going to buy it back. One more time. AMD, say you bought a $55 call, all right? Say the price is currently at $53, okay? But now, after 2 weeks in, your expiration is for 3 months from now. So $53, so say the stock price went down to 51, all right? Now your expiration, say 2 weeks away. Well, it's getting kind of iffy whether or not it's going to go back up $4 to reach this strike price and likely get exercised. Okay, so what's going to happen is this premium that you receive, $50, is now going to decrease because the price is going down. Therefore, the probability of this happening is lowering. Therefore, the option premium is going to go down. So now it's only worth 10. You're going to buy that contract back for $10. You took the $40 in between. That's your profit, and you kept your 100 shares. Okay. I don't know how much easier I can explain that. So now we'll do a full-blown example of AMD. All right. So let's change it up. You get some refills. All right. So AMD. All right. Got AMD stock. We want to buy 100 shares. And we'll say right now it's at 50 bucks. $50 a share, we need $5,000. Okay? So some of you might be asking yourself, well, wait a minute. If I'm only receiving $50 for the premium and the shares cost me $5,000, I'm getting a very, very, very small percentage of this as part of the return. Excellent. That is why we're going longer on the expiration, right? So this is like 5 days. We put it back on AMD. All right, here's AMD. We're gonna look at a 6 month again. All right, so say you're here. All right, say you're here. So you're at, let's put you at 50. So 50 is like right up in this range. All right, so say 50 bucks. That's when you sold your call, right? So now you're hoping that AMD stays somewhere in below that, okay? Kind of following the MA would be great. But say it peaks right here. You just got exercised, okay? This went up to $58 if you bought here at 50, okay? Now what if you bought here, coming back down at 50, and now you're waiting for this time frame to pass, okay? So as it's going down, say it gets down to like $46, but you sold a $55 call, okay? Well, if you bought the shares at $50, $5,000, 100 shares, you sold the call for $55, okay? So you received a premium of, I don't know, 6 months out, probably like $700, okay? So it would look like $7, but times 100, that's 700 bucks. All right, so you got your $700 credit, you're chilling, cool, nice. Well, 700 on a premium on the shares cost of 5,000. Now you're getting a little better percentage return here because that's instant money in your pocket, all right? Now, once you get over here, you got your $55 call sold, but you bought it in this range. As this price decreases, you know what? Man, I got my $700, man. You know what? I think I'm gonna roll. This sucker's only worth 200 bucks now. Well, I'm gonna go ahead and buy back this contract at $200, and I just made the difference of 500 bucks, okay? 7 minus 2 is $500. All right, there you go. That is the brief way to exit a contract early, okay? So say we still sold a $55 call. Now we bought it at $50 a share, $5,000. Now what happens if it goes to $55 and glad I was checking my time because I just realized the video stopped like right when I was talking. So real quick, back to where we were. So we said that, you know, if you wanted to cut your contract early, it went down to 200 bucks. You bought it back for $200. You originally received 700. You made a $500 profit in between. Now, what you need to do is recognize your break-even price. So, if you're looking for the contracts to exercise and where it will likely be exercised at, if somebody doesn't immediately exercise right at $55, $56 because they see it going to this higher range, so they want to then pick up this extra profit there on their own, or they can just wait and exercise against you then at your break-even price. Basically the credit that they paid so they know that they're making money, right? So you need to add 55 and 7. So that's 5, that's 60, that's $62. Your break-even price is $62, okay? Well, why is that? Because you're adding the credit you received to the actual strike price, okay? So now you got $7. Remember, it's options, so you can't say $700. You're not going to add 700 to 55. So $7 to 55, 62 is likely your break-even price, okay? That is where technically the credit is no longer in service and you would have lost money up to that point. But if you get exercised in between 55 and say 62, you know, the person on the other side wants to just continue to reap it. Say they think it's going to shoot up to $70 or $80, they're going to go ahead and accept all that up to that point. But regardless, they still have the right to exercise the contract at 55. So regardless, you are selling your shares at 55, no matter if the stock went to 100. Okay, that's a huge loss on your part, but you'll at least get the credit. You'll get the $5 a share or whatever. These are things you have to think about when you're doing this, especially with something like AMD. I personally believe AMD, this is my opinion, not trading advice. I personally believe AMD will be sitting at probably $90 to $150 somewhere in the next 5 or 10 years, easily. Up there with Nvidia is like 200 something bucks. I personally think AMD has a huge impact coming in the future, depending on how this whole coronavirus thing happens and works out. But this is pretty self-explanatory, guys. I'm actually writing a book on this right now of how to do this. It's going to be a lot more easy to read for yourself. You know, I'm going to try to make it as understandable as possible. Selling covered calls can easily be It can easily be adding income to your retirement funds. You know, if you're allowed to trade options or sell options in them, it can easily be a moneymaker. I'm actually using the one account, especially the Robinhood account, to actually do this. My account that got brutalized, my dividend account full of REITs, Real Estate Investment Trust, it got just brutalized. So one, GCI, that completely just took a handful of my money. I'm actually selling calls against it with the 100 shares I have. I will continue to sell calls against that until I've made my money back. At $15 or $20 per premium per time, whatever. We'll just do what we do. Hoping the price eventually restores to at least $4 or $5, and I'll just get rid of it. Selling covered calls. So you can flip premium. You can sell the calls against your shares, and then when the premium starts to fall, you buy it back at a lower price, profit, or you run it all the way. You get a long expiration. You're really hoping you get exercise. If it's something that jumps up and down like this, and you bought the shares down here at this low, and you sold the calls, and then it hits this high and you get exercise, boom, you just made guaranteed money and you got the credit for it. There really is only one way to lose in these positions, and that is if the shares go down, if the shares go to zero, if the company bankrupts. So these are things that you need to think about, which is in the book. You need to look at shares that are actually going to be worth a crap in the next 5 or 10 years, because you don't want something that's going to be on a slow downtrend like this, even though some of you will go check Intellistat or MFA, and OPK. OPK has actually been $20 2 different occasions in the last 10 years, but it's been on a nice low, you know, $2 to $5 range. MFA has been between 7 and 10, but it's on a steady downtrend. Intellistat was 7 or whatever it was before this happened, and here we are. I'm only wanting to go to $2. That is a very simple target to hit, okay? Especially if I have 2-year expiration time. I will continue to add these shares. Now, once it breaks below $1 and stays down in that 75, 80 cent range, I will reconsider what's going on, because the premium is going to start dropping drastically. I either have 1 or 2 options: buy more shares, continue to average down, adding more premium at the same time, or I am going to wait till those premiums are super cheap and just throw a lot of money at it and buy them all back. Because then I still have all the shares that I can also sell to get that credit back as well. And yeah, that's going to be all for tonight for these videos. I'm trying to think, there was another video I was going to do on something else, but I'm going to end this one here. Thank you for watching. Official Trader. Like and subscribe. Show your friends. I'm a real trader. I trade with my own real money. I don't paper trade. So you don't ever have to worry about me giving you fake numbers and charging you $600 an hour for something I learned 10 minutes ago. So I've been doing this for actively about 2.5 years now, 4 years total, but that's only because 2016 I started looking into it. Cryptocurrency is going to be hyping up pretty soon here, I believe. The Bitcoin halving in May, so that's right around the corner. I got a handful of different cryptos, so I got like $600 worth of cryptos, so we'll see what happens there. Hopefully Bitcoin goes ape crazy again and shoots up to $20,000, $30,000, $50,000, and that way it can just elevate all these alternate coins and I can make a killing. That'll be nice. So thanks for watching, guys. I hope you enjoyed. Try to keep you not bored, but now we got a little more to our disposal rather, so we can actually show you some different things. So matter of fact, I'll do another video again in just a minute. Thank you.